And I know that, no one has a crystal ball, and I'm no expert on the venture business, but it seems that liquidity needs to come in order to drive returns, and that liquidity can come from the public markets or from obviously the last few years it's been difficult to come by either of those things. As this revolution plays out and accelerates, do you think that side of the business in terms of how liquidity will be generated will change, and if so, how?
Yeah, it's actually changed a lot in the last 4 years or so, and I think it's not as broadly known, but yeah, we've done a bunch of secondaries either directly in our companies or at the whole fund level. I think we've returned 3 or 4 funds worth over the last 4 years without any exit, without any IPOs or M&A, because there's
And
a so there,
is that and what's the profile of the buyers in those scenarios?
for the usually are follow-on investors for the direct ones, especially like 2021. There was a lot of like very high priced rounds where we sold to the new investors, and as seed investors, like generally no one cares. If you're Sequoia who led the A and B and then you sell, people that can raise some eyebrows. So it's a real advantage of being a seed investor. And then you're seeing a lot, right? And that's even, I think, in the last year, you see more and more secondary investors, specific secondary funds are trying to get into these kind of private companies because they're staying private so long. Funds that are want to buy out like a portion of your fund. We have kind of older funds that have done well that we want to liquidate to get money back to our those LPs, and they have companies that people want access to. So I think you're going to see a lot more of that. I think not reliant on M&A, especially coming from the very early stages where, you can have, we tend not to sell unless a company is worth a whole fund, kind of going back to the power law, but you tend to have these companies that, can be worth a fund or two. And I think it's good for everyone to sell part of that, get cash back to our LPs. That's our job. So I think that dynamic will continue.
Does that tend to happen when rounds are coming together anyways?
Traditionally, yes, but I think more and more it's even happening outside of that, and it's even happening kind of at the fund level where it's like, okay, we'll buy 20% of the entire fund across the whole portfolio.
Is there equivalent of like the way that a startup where it might be their time will engage with a banker to run a process is the equivalent for a VC who's looking to drive returns through secondaries?
I maybe, but I haven't seen that. It's a relatively small community. A bunch of our LPs are kind of getting into this as well. So it was even I would say over the last year and a half, we did a secondary sale last year that a lot of folks kind of inbounded us. So yeah, I think it's going to become a thing, and I'm seeing more and more of it, and it makes sense. Like back to your people should focus on what they do well. We're early investors. We're not like investors should be deciding on some company with $1 billion revenue of whether to hold or sell very late. I think we kind of want to do what we do best, and we want to get money back to our LPs.